Live, 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 live. Live, 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 live.
Live, 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 live. Are we forever live? Live, 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 live.
Just waiting for everybody to come in and join us for today's episodes of Hot or Not.
Hot or not?
Yeah.
That was a thing.
It was.
That was a thing.
It was. Thank you for joining over here on Instagram. Thank you
What's
for joining
up?
over
Great
here
to
on TikTok.
See you guys on Facebook, Instagram, TikTok, and YouTube. We go live on all the platforms. All of them. How many? All of them.
Thank you for joining over here on Facebook. And how you doing on YouTube?
We're up on YouTube too.
All right, guys, you know the routine. We're here to answer home loan questions, real estate questions, market questions, interest rate questions, programs, what FICO score, what down payment, all the scenarios that you may have. And if you're a loan officer, we'll answer your questions too. You can even hide. It's okay.
We dig loan officers in here. I've actually been on to some other loan officers, and I'm like, okay, I'm watching you. I'm bored. This is a very boring topic. You better make something a little bit more exciting today. Tell people how to buy a house in 2024.
We've been teaching loan officers how to do their business for the past probably 10 years now.
10 years.
Just wait, because we're going to be on to something new, and you can copy us doing that too.
Yep. Hey, this is what's going to happen with the rates. You guys want to know? That's what's going to happen to the interest rates. No question about it. That's what's happening. Done.
All right, next question. Well, here's,
All right, cool.
here's the biggest challenge that people are faced with is, and it's not even real fact, it's their interest rates are high, so I'm going to wait until they come down. Mm-hmm. But what Lee just showed you is the rates are going to come down. Okay, one day, we don't know the exact day, but one day they're going to come down. But simultaneously, the values are going to skyrocket, and that's going to be a very bad spot for people that want to borrow money. So if you want to borrow money, borrow now because you're going to borrow less.
Well, dude, I went into the guidelines on the assumption because we get a lot of people on here. They're saying, hey, I'm just going to assume loans. I'm going to assume it. I'm going to assume it. What's up, Mammy Zero? Great to see you.
Always great to see you.
So we went down the path of assumptions, and I was like, you know what? I'm pretty sure these guidelines are correct, and it was correct. The conventional, they do have a due on sale clause. Almost all of them. There might be a few exceptions, but the conventionals have due on sale clauses. You can assume a VA loan, but you should be a veteran to assume it. You can if you're not, but it's horrible. Could go bad.
Yep. Crystal, 1983. Is the VA rehab loan harder to get than the regular VA home loan?
Oh, yes. Not a little bit harder, a whole lot harder. Take how hard you think it is to get a VA loan, and then tack that times 3, and then add a few other things on top of it, and that's how hard it is to get the VA rehab loan. It does exist. There's a FHA version called the 203K version. There's the VA rehab version. But here's why. When you build a house, it's a profession. When you put on a room, it's a profession. When you fix something, it's a profession. And the VA doesn't go, well, you know what? Yeah, roofing, what could go wrong? What could go wrong? Just do it yourself. Yeah. No, they want a contractor. They want a general contractor with a license and, shocker, experience. Ooh. Shocker. But it does exist. We will do them. We do. There's actually called a VA construct a perm loan. Construct a perm loan, which is not the actual VA loan, but there's a process where you do a construct a perm and then you do the perm out, but the same catch. You better really, really know what you're doing.
Are you saying that because you're the only one at this table that can get a perm?
Yeah.
Okay, fair
I
enough.
like that. See, I see what you did with that. I see what you.
Enough.
I see what you did to that.
So here's what we want to do today, guys. Well, at least I want to try. I didn't even ask you yet. Is I want to see if anyone wants to go live with us and go on the feed with us. You don't have to show your face if you don't want to. But what we're going to start doing, hopefully in the afternoons, is going live and interacting with you guys. You get a chance to answer questions here. Sometimes there's a lot of questions, so we can't invite everybody on. Mm-hmm. So our first episode will be Q&A. Our next episode will be actually live talking to somebody that can give us their exact scenario.
What's up, Lori?
So if you are interested in doing that today in the next, call it 45 minutes or so, just let us know and we'll go ahead and bring you on.
Well, there's something called a battle on TikTok. I mean, we can't do this on Facebook or Instagram or TikTok. Well, but on TikTok, and I see a lot of loan officers trying to use TikTok this way. If they battle, they're like, "Hey, let's battle." I think we accidentally landed up in a battle and we won one. And we won.
With Iran.
And we won. Yeah, we won.
Iran.
Yeah, we fought Iran. We won. Yeah, that's how it works. What do we got? What do we got? Hey, this is where the interest rates are going to be going in the future, in case you were wondering. Yes, this is where we're at, 5.25 to 5.5. This is what the Federal Reserve is stating for the next 2.5 to 3 years. This goes all the way to 2027. And they all come back to a consensus at about 2.5% in 2027. How does that affect mortgage rates? Usually mortgage rates run about 150 points, 100 to 150 points above the 10-year yield. So that's how it affects it. What does that mean in English? You should be in the fours, mid fours. So we're hoping. And when that happens, there's going to be a boom in real estate. Boom. But it's not happening right now. In fact, it's going the other way.
Yeah.
It's kind of really going the other way, kind of bad.
We're not losing value, though.
Yeah. I don't know.
I'm sure there's pocket communities that are, because there's some that are up, some that are down.
Yeah.
But we're not losing value. We're just not seeing the influx of people buying. Well, I take that back. We're seeing a ton of people that want to buy. A ton of them have credit challenges. A ton of them have income challenges. A ton of them have down payment challenges. And then there's a whole other group that are already qualified that aren't necessarily doing anything yet. So I am seeing the activity. They're just not making the moves.
And I keep running to the same scenario. Like, hey, Lee, I really want to buy a house. And I'm like, cool, I'm going to get you qualified. Yeah, but I want to do zero down. And I'm like, okay, I'll do that for you. But I need you to know, once we go with zero down, the whole rules change. It's no longer simple. There is no free lunch in this world. So if I qualify you for $400,000, bringing in your own money, well, then you're probably going to be qualified for about $320 with a down payment assistance program. What?
Davis Family Universe. This is the challenge right now. This is actually a problem. Should you sell now, then, or just wait for the interest rates to drop? That's a challenge for sellers.
So it depends on what your purpose, Davis Family Universe. If you're trying to move out, so here's the thing. If let's say you live in a $500,000 house right now and you got in about $300,000 and you're paying 3% interest rate. It's a great interest rate, great scenario. You have $200,000 in equity. That's an amazing scenario. That's a lot of people's scenario in this country right now. A lot of people. Here's what they run into. They're like, hey, I want to grab that $200,000 out, put it into another house. That's awesome. Cool. But in the meantime, every other house at that level has gone up. So every house that you're going to get, you're going to put $200,000 in. You're still going to owe $300,000, but your interest rate isn't 3% anymore. Right now it's 7, maybe even 8.
Yeah.
So with that, your payment went up. And when you run the numbers, you're like, wait a minute. So I'll be able to move, but I'm going to get much more expensive. It doesn't make sense, and it doesn't pencil out.
And that's only applies to those that are kind of staying local, the people that are just like, hey, we want to upgrade, we want to downgrade, that type of thing. But those that are moving, like the big exodus of California and New York, those people are making a decision for different reasons. So that's a whole different scenario. J3131, this is the best time to buy because there's less competition from the corporations. You're correct.
Yeah,
and buyers.
Yeah. And the corporations, when they buy, I actually talked to a realtor. I'm like, hey, I hear that there's corporations out there that are buying up all these houses. Have you ever seen that happen? And she said, no, wait a minute. Yes, as a matter of fact, I have. And they didn't care about the price. It was so strange. They came in all asking price, all term, everything. They just came in because a corporation isn't a person. They don't give a shit. They're just running numbers, and they know that the houses are going to appreciate over the long term. So they buy for the long term. Cool. Yep. AW, hi guys. What's up, AW?
AW root beer?
What does AW stand for? I love that.
Vinny Garcia, what home insurance companies do y'all recommend?
They're all scams.
Yes, that is a fact. There's a couple that we work with. They don't pay us to promote them, so I'm not going to out them. But you can call us.
Yeah, they're all scams.
You can call us.
Yeah, they're all freaking scams, man.
Dude, insurance is a scam.
It's a scam. It's a scam. I even think mortgages are scams. I do. It's horrible. But when I actually say, hey, listen, you know that $300,000 that you're borrowing? Yeah, when you're done paying it back, you're going to pay $1.2 million. Like, what do you mean $1.2 million? That doesn't even fit in my world anywhere. The top of my world is $300,000. I'm like, no, it's not anymore. The top of your world's now $1.2 million because when you look how much you paid back the bank over 30 years, it's going to be $1.2 million. But wait a minute, this house only costs $300,000. I'm like, yeah. And if you don't like it, you can go not use a bank.
Yeah, you cannot own a home.
You cannot own a home. And I'm like, holy shit. And when I say that, it's such shocking news to people. And it is to me even, because that's a lot of money. 1.2 million for someone who lives in a $300,000 world. That's a lot of money.
Maverick A. Young, yes, in all 50 states. He answered our question, I think.
Yes, we do business in all 50 states. All 50. How many 50? How many of them? All of them. Boom.
A-Dub's real name is Alejandro Wallace.
Oh, that's awesome, man. Alejandra. Alejandra.
Luna McGarry in the house. What's up, Chris and
Luna?
Lee? Here for my daily dose of knowledge.
We are here for you. We're gonna get the knowledge like this, right in the vein. You're gonna be like, okay, CPI came in at 3.5%. Oh, that hurts. Oh,
he's trying to
shit.
get us kicked off.
That hurt. I'm trying to get us kicked off. Hey, CPI has not been coming in good. The first time we expected it at 2.9%, and it came in at 3.1%, and the market freaked out a little bit, but not a lot. And Powell came out. He's like, hey, guys, we want you to know that it's not going to be a straight track. There's going to be a few bumps in the track. Okay, cool. Next month comes in at not at 3.1, but at 3.2. And he's like, hey, this is still heading okay. I think we're fine. Okay, good. Last month comes in 3.5. And this guy's like, well, I don't want to talk right now. That's what he said.
Yeah, what a jerk. Crystal 1983, MIL gift, MIL, don't know what that is.
Million.
Gifting $300,000 in equity, hoping to apply for VA loan soon.
Military. MIL, military gifting $300,000 in equity, hoping for a VA loan soon. Crystal, if you're going for a VA loan, make sure you use a loan officer who really knows what the hell they're doing, because the gift of equity is an issue. There's a lot of people right now that are going, hey, listen, you can assume a VA loan, which is technically true, but you can hurt the veteran. And you can have an unclear title. And if you default and that veteran didn't give up his entitlement, the entitlement will go against him, and he never even know what happened because he sold it to you 6 years ago. You defaulted. He's now scarred for life because he didn't give up his eligibility.
Yep. What's the lowest down payment on a conventional loan? Asked Alexis Cortez.
3% or
Woo!
0.
Woo!
3% or 0 on a conventional loan. It's a little complicated, but that's the answer.
There you go. Crystal 1983. It needs a roof. That's why she's asking about the VA rehab, man. So here's the good news, Crystal. It can be done, but here's going to be your challenge. Contractors. Contractors are the challenge. They're the ones that hang up the situation because it's a federally insured loan. They're going to assign a case manager. That case manager knows how much it costs to do a roof, knows how much to do flooring, knows how much the repairs need to be. So they want a contractor that's licensed with the right paperwork, that needs to fill out certain documents, submit certain things that the case manager is going to recommend. And for contractors, that can be very difficult because they're good at swinging hammers. Yeah. They're not good at paperwork.
VA approved. They have to be approved, yeah.
So there's a lot of different hoops that they have to jump through. But if this person you're buying the house from is not in a major hurry and we can walk the contractor through it, we could definitely make it work.
We appreciate you guys. We are helping people get a house in 2024. We are on Facebook, Instagram, TikTok, and YouTube, and try to be entertaining and give you the knowledge. Hey, if you're a loan officer, bring it in. Have us some questions. Talk to us. If you're a realtor, talk to us. Hit us with some hard stuff. If you're trying to buy a house, this is the spot you want to be at because we'll give you the real answers.
SI Culinary, I want to know what you know, but it's time for a commercial.
This, if you need a badass loan, call a badass loan officer. You can reach your badass loan officer, Chris and Lee, at New American Funding at the numbers on the screen. You have to screenshot because it's going to disappear in 5, 4, 3, 2, 1. Boom.
And if you want to get started without talking to us, just go to the link in the bio, click on apply for a home loan now, and get the process started. So,
here we go.
Yes, I want to know what he knows.
Culinary mushrooms. SI Culinary Mushroom. I love you guys, man. I love you guys. Defaults are greater than 2000 and 2005. People should wait to buy a home. SI Culinary Mushrooms. You are plain and simply wrong. Just wrong. Just wrong. I love you guys, by the way. I wish you would stick around because you guys usually come in, fire, like, gotta go. Because I actually follow the numbers. I see the numbers. And if you believe the media, you're going to see that, hey, mortgage foreclosures are up 100%. Yeah, but if you look at the line, it goes like this, and then it goes up. But if you go back to the amount, the actual physical amount, not even close. Not even close. But I've seen the people that scare the people. because I'm in the business, so I have to learn the numbers. SI, culinary mushroom, I love guys like you. Come on, let's talk some more.
He said it was on 60 Minutes.
Oh, there you go. That's absolutely
true.
That's got to be true.
Okay,
No,
so,
no. It's
so
not.
what are you saying, Lee? Are you
Okay.
saying the news doesn't tell us the truth?
Wait a minute. What?
Give me some data on
Wait,
that. What are you talking about?
what?
Inform all of us.
What? It's hilarious, but it's actual primal culinary mushroom. Culinary mushroom. Here's what happens. If you, this from basic caveman days, when we were all walking around and there was dinosaurs. Hey, if everything was calm and collective, you're like, all right, don't got to pay attention to this, don't got to pay attention to this, don't worry about that. But the minute a Tyrannosaurus Rex comes out with them big teeth ready to eat you, you're like, rare, scary, scary, scary. Better pay attention. That's how they sell advertising to you. They sell it to you by scaring you, and they're pretty smart about it, so they'll actually scare you with facts that aren't all the way true, but they're still facts. Wait, what? How do you do that? Like this, you say foreclosures. All right, in 2006, there was 100,000 foreclosures a week. All right, cool. In 2023, there was 1,000 foreclosures a week, okay? So now we have a reference, 100,000, 1,000. Uh-oh, in 2004 or 24, it's up to 3,000 foreclosures, which is technically a 300% jump in foreclosures. Is that true? Sure is true. Absolutely true. 300% more foreclosures than last year. But if you're not smart enough to back up to that big number of 100 grand, you don't understand that it's only 3% of the all-time worst, but they will not sell newspapers or clickbait by telling you that.
So after you watch that episode,
Boom!
you probably got a My Pillow.
Yeah, you got a My Pillow.
So okay, so we're gonna.
Are you wearing a mask?
I'm gonna get to every one of your
Yeah,
questions.
culinary
but
mushroom. Were you
culinary
wearing a
mushroom,
mask in
we're
your
gonna-
own car by yourself?
We're gonna address this right now.
Yeah,
So
okay,
he
cool.
said no defaults. No defaults foreclosures haven't happened yet, and it happens every 10 to 15 years, which I disagree. And it's history. And I thought this before I saw the news story.
Okay, culinary. I'm with you on a lot of this. I really am, because I dig into it because this is my livelihood. I really got to understand the shit. So when I look at it, you're right. There are some lates. You know where the real lates are? It's not in houses. And here's why, culinary. I'm about to break your bubble, because if you want the world to crash and the real estate to crash, people have been saying that for 10 years. It's not going to happen. Here's why it's not going to happen. Because there's a lot of people. You know, put this number into Google. Everything's Googleable. It's amazing. How many people have an interest rate below 5%? 70% of America has an interest rate below 5%. Below. How many below 4%? 40% of America has below 4%. Holy smokes. So what that means is people are house trapped. They're house trapped. You've got a guy who bought a house for $500,000 and it's now worth $800,000. That house, he bought it $500,000. It's worth $800,000. His mortgage payment's $3,000 a month. He's living in an $800,000 house. The rest of the world is still up to $800,000. In order to get that lifestyle, he's got to buy an $800,000 house. The problem is, it will not be a $3,000 mortgage anymore. An $800,000 mortgage is how much? $6,500. $6,500, right? $6,500 a month. So he's gonna have to go. Hey, I'm gonna get out of my $800,000 house and my $3,000 mortgage. I'm not gonna do it. And they're house trapped. This is the majority of America. And then here's one more that's quite frightening. Absolutely frightening. Do you know what percentage of Americans have a mortgage? What? What? Do you know how many people don't have a mortgage? What? They don't have to sell, ever. All they got to do is pay property taxes. But you will never, ever, ever sell advertising if you tell people that stuff.
Yeah. Here's the other thing, mushrooms. So you're talking about your 10 to 15 year situation, okay? Yes, prior 40 years, there's been something every 10 years, but there was a reason. There was a reason. 70s, there's a reason. 80s, there's a reason. 90s, there's a reason. 2000, there's a reason. Tell me the reason for this one that you're talking about. What is the reason why this flood of foreclosures and defaults are going to be happening? I need your reason.
By the way, mushrooms, I really wish you were right. I wish, because I'm sitting on the sideline, I will buy up properties like nobody's business. I will start gobbling them up like I'm a freaking bank. I will eat the properties for breakfast, but I don't think it's going to happen.
You eat properties for breakfast?
Dude, that's what I do.
That's weird.
Some people get up and eat properties for
All
breakfast.
right.
That's what I do.
Brianna, thank you for the love.
Appreciate you, Brianna.
Sosa,
Darling.
1991. How long
Darling.
does underwriting take to approve you?
Sosa. Usually 24 to 72 hours in that range. We actually have turn times, 24 to 72. But don't confuse that with processing. Processing takes weeks sometimes. Why? Because when we put together a loan and we send it to a processor, the processor has to go, all right, we have to actually prove this guy works there. How do we do that? They send out for what's called a VOE, verification of employment. That happens behind the scenes. And sometimes it's easy. Sometimes it just comes back within an hour. It's like, hey, yes, this guy works here. He's been working here 4 years. And this is how much he makes. And this is how much he's going to make. That's a VOE. But sometimes it takes a week, because they don't use the electronic system because they don't pay for it. So in that case, they have to find somebody authorized to deliver the VOE. We get the VOE, and that takes a week. So that's processing. That's not underwriting. So once you've been submitted to underwriter, that's the big deal right there. That's the big deal.
Hey, you don't know this, but we got people lit up on YouTube, people lit up on Facebook, and people lit up on Instagram.
I appreciate
So
you
we're growing,
guys so much.
I got to address these questions. Sean Williams from Facebook said, I don't think interest rates are coming down for a while.
I disagree, Sean.
Well, what's a while?
Well, it depends on what a while is. Good point.
Yes.
Because if you don't think it's coming down
Because
next month,
it was supposed to come down 2 years ago.
I agree with you, Sean. I agree with you. It's not going to happen in April. I don't think it's going to happen in May. I don't even think it's going to happen in June or July. But I think in September it's going to happen. You know why? Couple reasons, Sean. Couple reasons. One, because the Fed is kind of committed to this. This is the FOMC meeting notes. And here's what they say. Right now we're at 5.25 and 5.5 on the Fed funds rate right here. Now there's 12 members of the Fed board, 12 members. And here's all 12 of them. There's 12 members of the Fed board, and they say, hey, next time we do, they're all across the board. They're about half should go higher, half should go lower. But then we go out a little bit longer, a little bit longer, a little bit longer, a little bit longer. They all come back down to a consensus around the end of 2026, beginning of 2027 at 2.5%. So remember, we're at 5.25, 5.5% right now, and all of them, the smartest minds in the world, these are not dumb people, smartest minds in the world are saying we're going down, 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 down. Now, is it going to happen as fast as I would want it to? No. I'm in the mortgage business. The minute the interest rates go down, I get 10 more clients that day. The minute they go down 50 basis points or 75 basis points, Chris and I are so busy, we got to hire an LOA, another LOA. So do we want it to come down? Of course we do. But the reason we've been around for so damn long is because we actually understand the market, and we understand that this is going to happen. And you know what, Sean, I don't know if you're a loan officer, but they told us the rates were going to go high. They told us a year ahead. And the chart looked the opposite of this. They said, hey, listen, rates are going to go all the way up into the 7s and 8s. And half the market was going, nah, it'll never happen. It'll never happen. And this guy right here, Jerome Powell, I don't know what he is, but this guy right here is like, yes, it is. And whether you like it or not, it's going to happen. And every time this guy has come out to speak, Jerome Powell, he's come out and said, the Fed still believes that this is what's going to happen. Every single time. Now, I get what you're saying, Sean. I get it. I saw we were waiting for a CPI to come in at 2.9%, came in at 3.1%. Ooh, punch to the gut. Next month, CPI, we're expecting 2.9%, comes in at 3.2%. Ooh, another punch to the gut. Last month, we're expecting 3.1, comes in at 3.5. Ooh, another punch to the gut. But I don't think that's the only thing that's going on, Sean. I don't think so. I appreciate you. I really do.
All right, guys, we're going to get to every single one of your questions, so just hang in there and help me. Give me some likes, guys. If you like the answers that are happening, give us some likes. We're going to try to get to 10,000 again today. So punch those likes if we answered your question. If you're mad at us, if you love us, please just give it to us. It helps us with the algorithm. Okay, Jerry Cook Realtor out of Texas.
What's up, Jerry Cook Realtor?
Hi, with rates going up, if a delay happens and the lock period expires, what can the buyer do to keep their lower rate?
Very good question, Jerry Cook. Very good question. So a lot of people, I'm going to give you some information on the loan business. You are a shopper. You're a consumer. And when you buy that lock, you spent some money. And sometimes you spent zero. So You bought that lock for a certain period of time. You might have bought it for 15 days. You might have bought it for 30 days. You might have bought it for 45 days. Or you might have bought it for 60 days. But it did cost you something somehow. Somehow. Yep. So if you locked at par, then you cost you zero. But if you locked at a very favorable rate, then it cost you X. Now, that is a commitment from the banks to the investor. And the investor says, hey, listen, I'm willing to honor this for 30 days. And you're okay, cool, 30 days. Oh, shoot, we're coming to the end of it. We're coming to the end of the contract. Oh, what do we do? Well, at our bank, we can usually give a 1 to 2 day courtesy extension, which is costing, but the bank eats it. But let's just say, oh no, we had a roof problem and it's going to take 10 days. By the time we filter all this through, we need 14 days. 14 days, there's going to be a cost. And that's called a lock cost extension. Lock extension cost. Lock extension cost. And those go from 1.25 basis points to, I don't know, 100 basis points sometimes. And if it's going to be longer than 30 days, you have to start activating strategery. That's not a real word, I know. But you have to activate strategery. And you have to go, okay, if it's longer than 30 days, it may be best that I release this lock, wait 30 days and relock. The danger is you're out in the open market and sometimes things go up fast. So you pay for lock costs. That's a short answer.
Chris Jones, any cons in buying a condo?
Lots of cons, Chris. Lots of cons. Some pros. Lots of cons. Here's the con. The first con is condos are priced different. Interest rates are usually higher for condos. Almost all condos. Second con, people buy condos for investments a lot. And because of that, the investors, Fannie Mae, Freddie Mac, FHA, VA, sometimes USDA. No, USDA wouldn't do a condo. So they say, hey, listen, here's the catch. We'll sell this to you, but it has to be over 80% owner occupied. Why? Because if it's all investors and the market goes bad, all the investors are going to walk away. So they want 80% owner occupied, and the condo administration actually has to report this, how much of it is owner occupied. So there are pros and cons. Biggest con is a lot of condos can't go FHA, can't go Fannie Mae or Freddie Mac for those exact reasons.
Matty Boo, how you doing?
What's up, Matty Boo?
Can you talk about the appraisal process for buyers, the good and the bad?
You talk.
Yeah, sure. So the appraisal process is the biggest point is just to establish the value, okay? If the agent, the listing agent did their job, it's going to come in either on point or just off just a little bit, north or south. It could be appraised for a little more, appraised for a little less. But the secondary thing that the appraiser is looking for is, depending on the loan type, health and hazard issues, okay? So federally insured loans like FHA, USDA, VA have an extra little layer that they look for when their buyers are coming into this house. So if there's exposed wiring, water issues, flooring, anything like that, because if they put a child on the floor, they want to make sure it's going to be safe in the house. So that's health and, no?
Invite the person to go live. You said you wanted to do it. So it was there for a little while.
So health and hazard issues are the biggest concerns. So these are the pros. And the pros are because when you move into a house, you want it to be turnkey. You want it to be safe. You want it to be a good purchase for you. Unless you're an investor. That's a whole different topic. Because investors will come in, pull everything out, and put everything in brand new. But if you're looking for your first house as a first-time home buyer, this is the benefit. Now the con is depending on the seller's ability. Okay? So this is the bad. The seller may not have the ability to do necessary repairs. So if the appraiser goes in there and sees a stain on the roof, it means there could have been a leak. It means there could be further damage. So they're going to want a roof cert. So they get a certificate. A repair person comes out and says, no, we need a whole new roof. This thing is done. So it's going to cost you 20 grand. The seller may not have that. And in that case, you probably won't be able to buy the house because they won't be able to do the repair, won't be able to pass the appraiser, won't be able to pass underwriting, and then you got to move on. So the appraiser, for the most part, across the board, is a good, not a bad. It's a good. One, you're going to get the value that you're looking for. Two, you're going to get the safety that you're looking for, and I hope that helps you. Let's see what else we got. Chris Jones. Do you do Barndominiums.
Do barndominiums appreciate? Everything appreciates. Everything. As long as you keep it in good repair, it will appreciate. It is real estate. It's a whole new segment of the market that's just taking off. It's kind of cool, kind of interesting.
All right, Brianna, will the NAR law change affect the loan officers?
Might actually affect us in a good way, in a very good way. Why? Well, because you'll come to us and then we get to tell you which realtors are actually good. Here's the problem as a loan officer. We get a lot of our business from realtors, and a lot of them are brand new and they just got a license and they're very happy, but they don't know shit. And they're hustling in the beginning, so that's good, but they can hurt people, and that's a problem. That's a problem. So when somebody comes to me and says, hey, listen, Lee, I need a realtor in X area. I have a way of vetting them to make sure this realtor has done a lot of transactions, knows their stuff, actually can handle things if things go wrong. So it could affect us in a good way because the realtors will start coming to us. That's a scenario.
All right. TikTok user, I'm a 490 score. With annual income of 224. My wife is 680 with zero income. Can I get a house in the IE?
Take your 224 and fix your 490. That's what I say.
Or
what do you
buy
say?
the house cash.
Buy the house cash, yeah. So, yeah, 220 score. My wife's 680. That's awesome. So zero income, no. Take your 224, fix your 490. You're not going to get anything with a 490. Mm-hmm. It's cute, but you're not going to get anything with a 490. Doesn't matter how much money you make.
So those of you that have credit challenges, go to the link in our bio, click on Fix My Credit, and you can get the credit repair process started.
No default foreclosures haven't happened yet. Oh, I agree with you. Yeah, I know. I agree with you. They haven't happened yet. They're not going to either.
Yeah. Adventure.
I hope so, man. I really hope he's right, but I know he's not. It's like, I hope I win the lottery. You ever bought a lottery ticket and you're like, I've been buying these for a long time, so statistically I should win by now. I really hope I'm right. I hope I'm right. I hope I'm right. I hope I'm right. I hope I'm right. But I kind of know I'm not. Well, I really hope he is.
Adventure's got a 650 credit score. Is it possible to qualify for a home?
Not only possible, I would say probable, depending on your income and assets, location. Cool.
Okay, culinary mushroom again. Stock market is next.
Maybe, dude. You know what? Yeah, you know what? Maybe we should just put like tinfoil hats on, go live up in the woods. What do you think?
Why do you need tinfoil for in the woods,
dude? What do you think's gonna happen? Actually, if you want to dig into something called a mushroom, dig into the banks. The banks are where the problems are because they're not passing the acid tests all across the globe. I watched them today. Across the globe, they're not passing the acid tests. This is a bigger issue.
Culinary Mushroom said people are shorting the market right now, leading people to lose equity.
Oh, man, you're right. Except for the Dow Jones Industrial Averages at the highest point it's ever been in the history of mankind. Crazy I would love to believe you're shorting it. The S&P's at the highest it's been. The Dow Jones Industrial is highest it's ever been. There are bad days there, but if you actually follow it, you'll see that, boom, it's way up here. Way up.
Heavenly Love. Your name already under I'm assuming deed. Mm-hmm. Can you still buy a home as a first-time home buyer?
Probably not, Heavenly Love. Probably not. Here's why. The first-time home buyer criteria is you can't have owned a home in the last 3 years. If you're on a deed, you own a home. However, don't let that send you away because that doesn't mean you can't get an FHA loan with 3.5% down. What it does mean is that Home Ready and Home Possible, Fannie Mae and Freddie Mac programs, respectively, you can't do those programs. But that's about it. Every other program you're good for.
Yeah. Help us get those likes, guys. We're going to try to get up to 10,000 today. We're at 1,000. We only got 9,000 more.
Appreciate you guys. We appreciate you.
Karina said, hello. Remember me, LOL?
Karina. See, we're singing to Karina. She says, hello. Do you remember me?
Mariana, my husband wants to get a house, but wants to use a down payment assistance, but his credit is 600.
Marina. Probably not, except one tiny possibility. Only one. New American Funding has a proprietary product that does go down to 600. But the bigger question is, why is it down at 600? If it's recent stuff, probably not going to happen.
Not trading time for whatever. Best way to access home equity.
Take money out, borrow money.
Yeah.
Yep.
Home equity line of credit, I would say.
Yeah.
Depending on your interest rate.
Depending on your interest rate. If you have an 8%, you're probably better off going at 7 right now, 7.5.
Culinary Mushroom said 2 years. I don't know what that means.
I don't know either. 2 years, yeah.
Jib. I have a 720. My wife has a 650.
Don't forget the ones over here too.
What's
We got
the point
questions
if
all
lenders
across
only
the
care
board.
for lowest score? It's not lowest score.
Okay, so I have a 720 and my wife has 650. What's the point? Well, the point is that you have a 720 and your wife has a 650 and you guys are gauged on your own accord.
And it's the lowest score. So you have 3. You have high, middle, low. They get rid of the high, rid of the low, and you'll only go forward with the middle. So it's the lower of the middle.
But Jib, the mortgage industry has responded to your situation. There is a certain program where I can use something called blended credit, where we take your 650, we take your 720, we throw them both in a pot, and we pull out something right in the middle. It's called blended credit, not available on all programs. It does exist, but the way the banks look at it, they're like, hey, we got the good guy who pays everything on time, and we got the not so good guy. Where should we base our risk off of? Probably the not so good guy. That's why they use the lower of the two.
Apple user, these are disturbing questions. I'll tell you why in a second. But the question is, we are trying to buy a house and our realtor mentioned a private investor. What is a private investor?
Oh, Apple user.
It's the dreamers.
Apple dreamers. Apple dreamers. I had to catch up because I did it. User, hey. Private investor usually means they don't want you to go regular, conventional conforming, Fannie Mae, Freddie Mac, VA, FHA, USDA for some reason. And usually there's some type of payment on the back end of somebody that's teaching you how to use these loans. Because you know what? When a realtor sells a house, do they give a shit where the money comes from? They don't. All they care is that it closes and they get a commission. That's the way it works. Unless somebody says, hey, you get them to use me, I'll take care of you. Does that happen? Happens all the time. Is it pretty? Not pretty at all. You have to make sure, I would highly recommend you make sure you're not qualified for a conventional conforming, Fannie Mae, Freddie Mac, VA, FHA, USDA before you ever consider private money. Just think it that way.
Well, here's the other thing too. I don't know if it's private money from the lending side or buying from a private investor on the purchase side, the house itself. So clarify that one. Heavenly Love, if your name on the deed, we already answered that one, Heavenly Love. John Thomas, is a 642 credit score good enough for a home purchase?
Not only good enough, I will say highly likely if your income is able to get you that purchase price.
Yeah.
No, that's it.
So 2-year work history, 642, I think we're good to go.
Hey, Lee, how much you want for the Bronco? Call me. Oh, my. Cali Agent 77. How much you want for the Bronco? That is for sale. I will sell it to you. That means that in one of my properties up in the desert, there, Cali Agent, I think I know who Cali Agent is. I think we used to work with Cali Agent. Cali Agent says these guys are legit. Too legit to quit.
Chico, 720
you.
credit score, 50K salary. What can I afford?
720, 50K, 50K, 50K. 50.
I'm going to guess on this one.
Go.
I'm going to say 220.
I'm going to say 222.
All right.
220 starting, depending on your debts. Maybe a little bit more, depending on your cash.
All right. Dave, 3423. Fix your credit. Take a long process. Then income kills you. Huh?
Sounds like you're a little bitter there, Davey. 3423. Fix your credit. Long process. You're right. Takes a long time to destroy credit. Takes a long time to fix credit. Well, truth is, you can destroy credit in about 2 or 3 months. It's going to take you a long time to fix it. So here's the thing that I tell people, and it's very ugly, but it's also very true. If you have a 540 FICO, you earned that 540 FICO. And if you're trying to get the world to ignore what you did in the past, you could win, but it's not going to happen fast.
Yep. We're going to get to every single one of your questions,
Yep.
guys, so hang in there. We got a few more minutes left. Do me a favor, give me a bunch of likes because we're trying to get to 10,000. We're at 2,400. Thank you for the ones that give us the love, but it's time for a commercial.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officers, Chris and Lee at New American Funding, by dialing the numbers on the screen. But here's a little hack. Do not dial the numbers right now because they will not answer. They are live on these phone numbers that you see here. Screenshot it and it's disappearing. 5, 4, 3, 2, 1, bye.
Boom. Okay. Rue Almighty, thank you for the love.
Appreciate you, Rue. Rue.
VA home loan, question mark?
VA home loan, yes we do.
Thank you for your service.
VA all day, every day. Everyday VA.
Cillin Nicole 3. 600 credit score. FHA. Single income home. 100K annual income. 50K down payment. Can I get approved?
Maybe. I'm going to give you some. The answer that many loan officers will give you is 580. Yes, you can. But I'm going to give you the rest of it. 580 is the minimum for entering the arena to play an FHA at 3.5% down. That's the minimum to enter at 3.5% down. The reason I said 3.5% down, because I'm going to have some loan officers shooting at me going, no, you can go down to 500 with 10% down. You're correct. So here's the catch, and I run into this often. Somebody's like, hey, I got a 600 FICO. I'm like, cool, let's pull your credit. And I pull the credit, and when you pull the credit, you can actually see every single item that you're derogatory on. And I'll say, hey, listen, there's this MasterCard that says you didn't make a payment last month. Is that true? Well, yeah, it is kind of true. Okay, how about this creditor? They said you didn't make a payment last month. Yeah, that's kind of true too. How about this one? Yeah, that's kind of true. How about this one? That's kind of true. Okay, cool. All these creditors lent you money and you're not paying them back and you're going to go to another creditor and ask for money? Your 600 might qualify you from that perspective, but just common sense, the underwriter's going to go, yeah, you're not paying your bills. I'm not about to lend you any money. That's the true reality of what happens. Now, if your 600 was because 2 years ago you lost your job and you didn't pay some things, and then now you've made it all better, but those derogatories are still showing up, and I say, hey, why didn't you make the payments 2 years ago? And you say, I lost my job. I say, hey, cool, can you prove it? Yeah, how do I not prove it? Yeah, I got fired. All right, cool. Letter of explanation. Dear underwriter, my client got fired 2 years ago and they had a problem. They fixed it. They are now better. 600 FICO. Underwriter says, I believe it. I've checked it. It's good. You're good to go.
All right, I'm going to give you mine now.
All right, go.
Because of your 50K, I'm going to say the probability is high regardless because you have cash saved. So give us a call and we'll get you on the right track. Apple user.
I agree with him too, by the way.
Can you buy a house with only bank statements? My husband is self-employed. Apple user.
Apple user. Apple user. Yes, you can. Here's the catch. There's a catch to this. Here's the catch. It's called a bank statement program, and you're not going to get the the 7% low rates that you're seeing right now. Yeah. You're not going to get the low rates because bank statement programs are way more expensive. Not a little more expensive, way more expensive. But here's how it works. How it works, Apple users, real simple. We say, all right, how much did you bring in every month for the last 12 months or 24 months? One of the two. And you say, hey, listen, I've been bringing in $30,000 a month for the last 12 months. Cool. Give me all your bank statements for the last 12 months. I show 30,000 at the top of all 12. I add them all up, divide by 12, and then I show, hey, yeah, it's been 30,000. Cut that in half. I get to use 15,000 as your income. That's about the simplest version of how it works.
Yeah.
Can it work? Yes, it can.
Absolutely. Yes. What's the current interest rate?
Current interest rate, yeah.
Interest rate.
So average is something that's difficult because that's like, what's the average income? Doesn't matter. If you make 300, average doesn't matter to you. If you make 30, average doesn't matter. I will tell you that New American Funding is putting out a 15-year fixed at 6% right now. 6%. Don't believe me? Go to the top where it says our links. Go to Cool Stuff, today's rates. You will see 6% on a 15-year fixed. 6.25 on a FHA 30-year fixed. 6.25 on a VA 30-year fixed.
Rue Almighty, 620, and wife has 660, combined income 70K. Can we get pre-approved for VA?
All day, every day, Rue Almighty, as long as you are a veteran that has not used your VA loan. Or if you did use it, you paid it back and you reinstilled your eligibility. If that's the case, you're good to go. You are good to go. Here's a catch, Rue Almighty. There's some loan officers running around going, hey, did you know there's no VA FICO requirement? That's a 101 guideline for every loan officer out there. Every loan officer out there should know that the guideline says there is no FICO requirement for a VA loan. It's not. It's a residual-driven loan. Residual is a different calculation on the back end of the loan to ensure the veteran can actually afford the house. So VA loans are residual-driven. If somebody's like, hey, I'm special, I can do it with any FICO, every loan officer can. That's junk.
Shout out to Luna Bagheera and AW, our number 2 and 3 watchers. Love that.
What? We appreciate you.
M, thank you for the love. Heavenly Love now says 780 credit, income only 22K. Any hope for a mortgage? If so, how much?
Heavenly Love, Heavenly Love. I love the name. I got some bad news for you. 22K in income is probably not going to qualify you for anything. It's just not. It's just not.
So what can she do?
You can either get a co-borrower, which means your husband, brother, or whoever lives with you, or a non-occupant co-borrower, meaning, hey, mom's not going to live with me, but she'll co-sign for me. And we really hope you start to earn enough so that you can get that house. We would like for you to get the house.
A lot of people also come back with, well, my parents are on Social Security, or my parents are retired, or my parents are only receiving a pension, or whatever the case be. That can all be used, guys. That can help you. So don't discount that at all. It's actually probably better. Rule Almighty. Oh, no.
No, Ana Salinas.
Ana Salinas.
How much do I need to purchase a $300,000 home? Ana, if you want to get qualified for the max possible, $10,500. $10,500. Wait, what? Yeah. 3.5% down on an FHA will get you qualified for the max. Next question that everybody follows up with is, hey, is there down payment assistance programs? There are, but your $300,000 that you qualified for will drop down to about $220,000. It's a big drop in purchasing power when you go down payment assistance.
Yeah. User 699. What is the one of the primary reasons to get denied for HOA loan? You mean FHA. FHA. HOA is Homeowners Association.
Yep.
So what's the number one reason people get denied?
For an FHA loan?
Or I won't say get denied. Don't get approved.
Okay, denied and approved are different in the loan business. If they actually stamp your loan denied, it goes into FHA Connect, and it shows that you were denied by another lender. Then the next underwriter just scrutinize the hell out of it. So the number one reason is usually you got a Raptor in your driveway. It's almost always back-end liability. That's automobiles, credit cards, student loans, timeshares. I'm running into timeshares a lot. So all these back-end things are the biggest reason that kill FHA loans.
And credit.
Oh, credit too.
Yep. Helly Falcon. Why, when you pay off other loans, your credit score drops? That is a great question.
You take it.
Fantastic question. People think that having no debt helps your credit. But what really helps your credit is establishing that you can take debt, pay it off, and the thing that really jumps you up is available credit. So you get a credit card, you have $10,000 limit, and if you max that thing to 10 grand because they let you, which seems silly, your scores will drop because it shows you don't have discipline. But if you keep that thing low or even at zero, it shows you have a lot of discipline and your scores will skyrocket. So paying off installment loan also doesn't help you that much. So people think I'm going to buy a car and let's say $30,000 and you paid it down to $5,000. You said, you know what? I'm just going to take $5,000 and take this thing to zero and my scores are going to skyrocket.
They don't.
Nope. It's an installment loan. It means that after a period of time, it's going to go to zero anyways. Available credit is where it's at. So if you really want to boost your scores, get credit cards. Don't max them out. Keep them at a low or zero balance, and you'll see your scores skyrocket.
Cool.
549me. What's that mean?
549me.
There's no name.
Yeah, okay. Well,
just a
yeah,
picture.
that's a picture. All right, 549me. If that's your FICO score, this is not starting good. 570 husband. It did not get much better. 90K yearly income. What are our chances of getting approved? Almost none. At 549 and 570, you earned that 549. You earned that 570. At 580, FHA does start to let you do a 3.5% down FHA loan. However, this is what we run into every time I pull credit on somebody with a low credit score. It shows every single derogatory you've had for the last 10 years. So for the first 3 sheets, it's gray derogatory, which means you are currently delinquent on debt. If you are currently delinquent on debt, it will show up. And when you say, hey, listen, I haven't paid those guys. I'm not paying any of those guys. No, the last one I did had 11 derogatories current. And I'm like, you honestly want to look at the bank and say, hey, I'm not paying those 11 people, but trust me, bro, I'll pay you. Do you honestly believe that's going to work? Your chances are almost none.
Rosemary Cortez. My husband and I have a combined income of $95K and a credit score of around 620. What can we afford?
620, you guessed that.
Well, she said, this is our income, and then she said, what can I afford? I like the way women talk.
I like the way that works.
95K, I'm going to say 100 grand. I'm sorry, 400 grand.
400, I'm going to say 410, 420. 420. I like 420. 420 is one of my favorite words, yeah. 420 is fun. 420. Yeah, 100 G's, depending on your back-end debt. 420, you might have to buy down the rate a little bit in order to make it happen.
Donnie Young, what's the best program for a second home? 756 score with 180 income.
Donnie Young, I'm so proud of you for asking this question. I am so proud of you. The best program, probably the only program, is going to be conventional. Fannie Mae, Freddie Mac, because if you're classifying it as second home is a classification. It's actually a classification. So primary residence you can get in with 3.5% down. FHA, 5% conventional. If you're doing a second home, which means I live here, but I also live there. That's my second home. Not my second purchase, but my second home. You can get in with 10% down. 10% down, you do need a 780 FICO? No, it's 680 FICO, right?
Yeah.
680 FICO. You need a 680 FICO for a second home to start it, but 680 FICO. That's to start it, but their interest rates are horrible at 680. You get up into the 760s, 780s, you're going to get perfect scenario.
All right, guys, we're at 4,700 likes. We need to get to 10,000.
We appreciate you
We got a
guys.
few more minutes left.
Somebody's tapping that screen like crazy, man. We appreciate you.
Like the tappers. User 699. What is? Oh, we already answered that one.
Mm-hmm.
The deal for real. You guys have people in Vegas. I'm looking to buy a house this year.
Yes, we do. Actually, our LOA
love Vegas.
lives in Vegas. Our loan officer assistant lives in Vegas and only comes
Vegas
here
has
a
my
day
heart.
or two. Yeah, like she comes here a day or two out of the week, but she actually lives in Vegas. Vegas is about a 3.5 hour drive from us.
Actually, our favorite steakhouse is in Vegas.
Oh, what is
The
it?
Venetian.
Smith and Lewinsky.
Wolinski, but that's okay.
Yeah, whatever.
Rosemary Cortez. We already answered that one. User, will the rates go down this month?
Probably not. Now, users, 3742. Here's what's happening. Right now, the Fed funds has not changed at all. It's 5.25 to 5.5. The 10-year yield goes up and down. And when there's uncertainty in the market, rates go up a little bit, they go down a little bit, up a little bit, down a little bit, up a little bit, down a little bit. Right now, the market's a little freaked. And because of that, they've gone up a little bit. 125 basis points. Up, not 125 basis, 25 basis points. 25 basis points. So they've gone up a little bit. As soon as the certainty comes back into the market, you're going to see the 25 basis points disappear. The real shift is going to happen when the Fed makes the pivot from 5.25, 5.5 to 5.5, 5.25. At that point, you're going to see all the news people going, hey, it's amazing, our economy's better, everything's good. But it's not going to happen now. Not this month, not next month. Chris and I are both thinking September.
Yep. Board. Info on your company's down payment assistance. So here's what it is. 600 FICO score minimum, okay? This is the only program for down payment assistance that I know about, that I've ever heard about, that will let you go all the way down to a 600 credit score. It does not mean you will be approved, guys. These are guidelines. Once again, I said this yesterday, this is the ticket to the dance. It doesn't mean you can dance. It just gets you in the door, okay? So 600 minimum credit score does not have an income cap. That's a bonus. Does not have a reduction in purchase price. That's a bonus. It can be a gift. That's a bonus. A lot of good features to this. You just need a 600 minimum FICO score, 2-year work history, and then we can get you running to see where you stand, board. So you're going to have to call one of these numbers or go to the link in the bio right now, start filling out an application, and get the process started. User 3742. What's the best time of the month to lock a rate?
There is no best time of the month. It's actually market determined, and every day we look at rates. We actually have something on our phone that says lock alert, lock alert, lock alert. Because if the bond market starts going crazy, it's a matter of hours before the rates go up or down. And it can go either way, by the way. So it depends on when your escrow is closing, how many days you have to escrow, how sure is your loan, and what do you think the general trend of the market is? That's the big one right there.
Aw, Luna and Bagheera jumped to the #1 spot.
Appreciate you, Luna Bagheera.
Jib, what happens to a mortgage if one of the co-signers passes away and can't afford it without the other?
Well, in practicality, nothing as long as you're making the payments. Nothing. Because it's a weird area where they don't actually go in and say, hey, this person's dead. What are you going to do about it? They don't care. As long as the mortgage payments are being made by the person that's still on it, they probably won't do anything. Probably not. But if you can't afford it, eventually you're not going to miss a payment. You're going to be 30 days late, 60 days late, 90 days late. You're going to get a notice of default. 3 months later, sheriff's going to knock on your door, and they're going to help you move.
Luna and Bagheera, thank you for the love. Look at this. Luna and Bagheera just purchased an auto renewal subscription. What'd that mean? You subscribe to our channel?
Do we subscribe? We appreciate you, Lena. I don't know what that means. Well, I appreciate you so much.
Heck yeah.
I
Shay,
really do.
thank you for the love too. And then user 372042 said, are those rates today?
Yes, they are. User, go to the top of our links. You'll see the stuff that says cool stuff, and then you will see today's rates. Now, here's the thing that you should know. Here's the thing. All banks do this. All the banks, all the used car dealers, all the car dealerships, they put out their best possible rate. The best. And here's the way to find out if there's catch in that best. The law got passed a long time ago for both cars and mortgages that we have to put out the APR. If your costs are not very much, your interest rate's going to be this and your APR is going to be pretty close. But if there's a cost to get that, there's going to be a spread in the APR. So if you go to our rates today, not my rates, New American Funding's rates, you're going to see 6% 15-year fixed. And then right below, you're going to see 6.5 APR. Now, if you've been around a little while, you might, I have to pay something in order to get that interest rate. So that's called a buy down in the mortgage business. There's a buy down to get to 6.
Okay, you want to do a quick rapid fire and then try to bring someone on?
Sure.
Okay. All right, so we're going to rapid fire, guys, which means we're going to answer these questions quick. So user 3742, FHA 30-year?
Yes.
Donnie Young, is there a VA program for a second home?
6.25. Is there a VA program for a second home? Donnie Young, you can get a second home with a VA loan, but they're going to talk about VA entitlement, county loan limits kick in, and there has to be a good reason. Can happen, difficult though.
Real Mighty, I will contact you shortly.
Appreciate it.
User 699, what is the one main reason people don't get denied for an FHA loan?
That's credit and back-end liability.
Donna Bradley, can a VA rate of 6.25 be purchased with 2 points? Be bought down for 2 points?
Based off of my APR, I'm looking at 6.25 and 6.9. Depending on your purchase price, maybe yes.
User 44, how do I get a higher credit card offers? Credit Karma. So Credit Karma sells you credit cards. So go to Credit Karma. They're going to pull in your profile. They'll give you offers.
Can you explain a float down option? Float down option is when you pay to say, hey, I locked at 7, but if it goes down, can I get 6.875? The bank says, well, yes, but you have to pay for it. That's called a float down option.
Shay, I think 90K a year. I make 90K a year, 639 credit score, 21K cash savings with 401K available. Will I qualify?
Probably yes. I'm going to say yes. We don't know how much for, but probably yes.
Rosemary Cortez, LOL.
I don't know what you're laughing at, but we appreciate you, Rosemary.
Franz Custard, what do you think about wholesaling?
Depends on what angle you're hitting it from. If you're trying to use somebody else's straw man buyer, I think it's bullshit. If you are in the loan business and you're wholesaling out loans, good idea.
Creation clause. I'm in my husband's deed, but he's alone on the loan. Can I buy the first time home buyer? Can I buy as a first time home buyer? She's on the deed.
On the deed, probably not.
User 699. Would a HELOC be the best way to purchase a second property?
Probably not.
User 37. I haven't locked my rate yet, and I'm set to close before 5/1. Probably a good time to lock.
Yeah, better. And if you want to know if you got a good rate, send us an LE. Send us a locked LE, and we'll tell you if we can beat it. If we can beat it, you get a better deal. If we can't beat it, you got the best rate out there.
And let us know that's what you want us to do, because if you don't give us direction, we don't know what to do. Donna Bradley, what rate can a VA loan be bought down to?
Well, it depends on your FICO score. If you have like an 800 FICO score, Donna, I'd say into the 5s. Yeah, I'd say low 5s, maybe as low as 5. There's actually off-sheet pricing, but you have to have a really good FICO. You can't just buy. But, Donna, I would tell you, you really have to tune in more because there's reasons why you don't want to do that. I'll explain in a different live.
Where you guys located?
He's right there. I'm right here.
Riverside, California. La Cha-Cha or something. Chicago, Illinois, 805 plus. That's a great score.
That's an amazing score.
Income after taxes, 85K, 35K in cash. Can I afford anything?
You can afford everything. La Cacha. 800 FICO score gives you are gold paper. You're AA rated paper, AAA rated. Everybody wants you. You're going to get the best deal out there. We would be honored to be your loan officers.
We're in all 50 states, guys. We can work with everybody across the nation. Yep. It's SMART 2.0. Can I cash out when refinancing if I bought my house 6 months ago?
Depends on if you have equity. There's not a lot of equity in the last 6 months, but maybe.
Donna Bradley, VA 800 builders
providing
incentive to buy rate down.
Yeah, Donna. You have to see this. This is what the anticipation of the rates are in the future from 24, 25, and 26. Because of that, if you buy the rate down and you spend $10,000 to get low, you're going to refinance again in 2 to 3 years anyway. So save that $10,000, do a principal reduction, and that's usually the better way to do it. I can math it out for you, but we'd have to have a longer conversation. So we are going to invite somebody to go live. Who do we want to go live?
So Luna and Bagheera, you want to go live? Or Camacho, do you want to go live? We just want someone to ask us some questions live here because we're going to test it out and we're going to start probably implementing this system in the evening. So if you want to go live right now, let me know in the chat and then I'll try to find you and add you.
Whoever wants to go live, we're here for you. We're gonna test with you. You're the test cases. Do 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 do. Test case. Test case. So, all right. All these people responding at once. We can't go live on Instagram. Thank you for asking. Facebook either. We can't go live. I appreciate you guys. We can't interact with you on Facebook or on Instagram right now. We're doing it on TikTok, and we can't do it on YouTube either. So I guess not. No worries. Yeah.
Okay.
All right. No worries. So I think they actually. Oh, there it is right there. Look, invite as a guest. I don't know who that is.
It's Elena. Elena, you want to go live?
Yeah. Broker. Try broker plus mortgage platform. Cool Cat Cass. Cool Cat Cass. Try broker plus a mortgage platform. All right. Cool. We got it. So there's a.
It's okay.
Sorry, driving. Camacho says, sorry, can't do it driving. We appreciate you, Camacho. No worries. We're just trying to experiment here. We're trying to get our entertainment value up and our value to you guys for watching us, because we do see that there's some other loan officers that are going on. I've been watching a few of them. They're boring, man. Snooze fests.
Also,
we try
when you go,
not to be snooze fests.
When you go live, you don't have to show your face, but we hear you like you're a caller.
Yeah.
Okay. You don't have to show your face. But that being said, I'm Chris. That's Lee.
We've been Chris and Lee. We're out.